Testing audio. Audio check. 1, 2, 3. Testing audio. Testing audio. Audio check. 1, 2, 3. Testing audio.
There we go. Good morning and welcome. It is Thursday. It's time for Thursday's morning market tour planner session. And let me repaint these. So here's a couple of things going on right now, and that is an overnight downtrend. This is relentless overnight trending. It's not very elaborate, but it is. Just get this up here. It is definitely a downtrend. There are no higher highs on the way down. So, being relentless overnight trending, we're going to be looking if this were to persist into the open. We will be looking for the first 15 minutes to possibly trigger something. It's one thing to continue trending, not take out a prior high, but then to form. That is to continue forming the relentless trending overnight, so that the first 15 minutes might be able to give us a signal. If the first 15 minutes were exited under the overnight low at that point, or if the first 15 minutes were itself to create some discernible trending, lower lows and lower highs, multiple of both, during those first 15 minutes, then we would anticipate that reinforcements had arrived and will be extending even deeper post-open and probably through the morning. Or the alternative, not to have recovered the overnight high by 9:45, but at least to establish some discernible uptrending during the first 15 minutes. That would suggest that counter-trend sponsorship had arrived to retake control, and would be influencing the morning back up. So that's one setup we'll be watching for to see if it's even developed. Meet back here at 9:15 for the pre-open update, and we'll see if that is the case. Also, I'm watching, if you look at the 3-minute chart on the left, watching this pullback. Here's the first reaction down. It corrected by 61.8% before extending down to at least a 38.2%. That is entirely credible for a low. It's been responded to. So at this point, there is no bullish reason to revisit it. That'll give us some insight if we are, in fact, considering whether the relentless overnight trending setup may be developing. There's also, if you can see it, bounce, a pretty precise double bottom here on the way down. And from its interim high, projecting to a 61.8% extension around that range. Also natural support. Interesting that it coincides, of course, with something else. It's been responded to, so at this point there is no bullish reason to revisit it. Also, not only did the market respond to the 61.8% room for noise, essentially, around that construct, but it established a counterpart to the 61.8% at 39.81. There is no bullish reason to revisit just 39.81, unless that can be isolated, which I'll go into in a moment. And finally, here's another common retracement feature, if you ever see, and we look at this constantly through the day or look for them, is a prior trend in that direction. This is the afternoon's last pullback, and there is a 61.8% retracement of it coinciding. It's a lot of stuff that came in here that's contributed to this bounce. It doesn't rise, none of them, also not in unison. None of them give us any predictive value as to whether that means that this bounce necessarily has to resolve up. All we know is if it's retraced, having responded to those Fibonacci projections and extensions, then we're heading to the next lower objective, which, considering different patterns, doesn't offer any support at yesterday's low. In fact, my projections are if we return to 81 or 79 start breaking any of those, then we're heading to 39.68 and possibly 39.54. Those are the next lower attractions. And that's not helpful, not terrible for the potential of resuming the rally from last Thursday's low. Remember the ongoing decline, its next target was 39.35. We saw bullish action there at 39.35 overnight, couple tests, and then isolated a test through Thursday's open. Or held it at least. So all of these 39.68, 54, these are extensions of the 61.8 retrace of that leg into Monday's highs. And then the projection. So there is what I call the river sticks. Once you cross it, you ain't coming back. And that's what this range 39.68 to 54 refers to. There's a cluster in here that actually is better represented by 68 as opposed to the actual 61.8%. But if this river sticks is touched or pierced, probed into it, that's a sweet spot of support that will find a low often. And also often when it doesn't, it will extend down. And extend down beyond the low that was utilized, the anchor of that, the Fibonacci scheme. And then some. I mean, ultimately, we'll be looking into the 3800s if 39.68, 39.54 fails. Just as being the next lower significant objective. Get it in there? There we go. 39.35 that had been identified the prior week to actually hitting that low. Same pattern. Since 39.35 did respond, we would anticipate that if 39.35's bounce fails, that we're heading to that same pattern's next lower objective cluster, basically, that comes in around 38.63. So really, that's the next lower objective if the 39.68 and 39.54 especially were to fail. A lot of support down there at 38.63. It's a 61.8 retrace back into this prior consolidation, so probably a recovery from there to some degree. But all this, remember, is in the name of trying to recapture or re-leverage the recovery of this downtrending channel, the thinner pink line that defined the downtrending channel off of February's high that broke lower. Its lower end influential multiple times, producing fresh lows on each touch, and then recapturing that at last Friday's open, extending without pause, other than to take a little overnight nap now and then, back to the upper end of that downtrending channel that has been influential. And now that recovery relies on the lower end of that channel holding as support. And it's been tested. It started being tested during Powell's day one and then probed during day two. Or actually, I'm sorry, it was attacked on day one of his testimony Tuesday and then probed but isolated those tests. That is, a timing window that was probing it, ended back above it. That's isolation. These would be isolation, these probes. So this is what contributes to a low if buyers can exploit that. So rather than looking at returning to 81 or 79 area, which would necessarily produce probes under yesterday's lows, find support here, pretty much here and now, actually, the way this is forming. It is valid to look at this downtrending resistance from the overnight. We not only need to recover the downtrend line. Remember, trend lines don't define trend reversals. They define the trend that whose price points contribute to that trend line. But we can break that trend line and still maintain the downtrend. It's the last touch of the trend line that must be recovered in order to signal that the trend is reversing. Now that'll need to happen during the first 15 minutes because that's the handoff between overnight and intraday. So none of these price points matter to anything intraday unless they're being influential during the first 15 minutes. So if we're going to be recovering, for instance, 39.93.50, that last bounces peak, at a time that's going to actually be predictive and give us some reliability that, in fact, momentum is reversing up, that'll need to happen by 9:45, for instance. So several other things going on here, but nothing that is yet resolved or specific enough. So meet back here at 9:15 for the pre-open update. We'll see what levels are important, if there's any immediately actionable setups as well. We do have a couple of economic reports this morning. Let's see, at 7:30, this is, of course, the employment situation report is tomorrow, so this afternoon is vulnerable at least to anxiousness, being paralyzed by anxiousness ahead of the report. So we'll talk about that as that approaches this afternoon. But meanwhile, that also means today we have the Challenger job cuts report at 7:30. It's not very high profile or reliably influential to price action. At 8:30 is the jobless claims. Also not normally very influential to price action, but a little bit of a higher profile ahead of payrolls tomorrow. And a Fed speaker at 10. All right, other markets, not a lot going on. Euro firmer overnight. There is still, let's get rid of the overnight, there is still potential to stretch this pullback down to 105, where some interesting stuff intersects. Silver firming. Silver also has, it did overnight, pre-open yesterday, come into some support here, the beginning of support at 1984, 1994. So an intraday retest of this area, sooner rather than later, like today, would be credible for resolving up, for forming a durable bottom. Otherwise, especially on a close under 1984, that leg would be extending. Gold, meanwhile, tracing out the same pattern on the pullback as silver, but from a higher low, with no requirement to probe lower. Can silver probe a little bit lower this morning without taking gold with it? You know, if gold were to probe this, is that 8-day-old low at this point, and close back above that low, especially if closing back above 1827 at that point, having probed a low, or having probed that low, room down to 1811, closing back above 1827, that would be credible for sealing a low, reversing momentum up. That's been neutralized. Then long bond. So the reversal down that was anticipated, that we traced out prior to actually exiting the weekend higher, right into the 125.26 resistance, did start forming. It doesn't have to, as we discussed at the time, it doesn't have to keep to any schedule as far as reversing back down into this island, which is a requirement. Its gap under all prior lows at 123.12 has to be filled from above. That is a requirement, no matter to what duration or degree the detour develops. Lots of alliteration. So whether that is just a 125.26, which has now withstood a retest intraday without closing above it, and is already starting, or at least now, reacting down further from it, and under 124.18 would start to confirm that this is double topping on its way back down to the low, or whether that is rescued for an even bigger bounce, which gets less likely, of course, as there's follow through from this passive resistance test. As soon as we can test that island, there's an opportunity, whether that is immediately rejected up here or whether the lower end of that island is tested and then recovered. Still an opportunity for that to form a double bottom in the long bond. Interesting timing. It's a little too premature at this point, but maybe it would anticipate a pretty successful big move from the Fed the following week. But closing under that island's low, especially if confirmed for a second consecutive session, breaks lower. We're going a little long on the planner here. Got a lot going on, apparently. Not a lot going on price-wise, as I said, but we are sitting right at precipices that, anyway, are prone to resolve in the next 24 hours. Finally, crude oil, deeper pullback than we'd want to see, if not deeper, more prolonged. Really in a bullish scenario where we're looking for this leg to have finished. It already had a multi-session range that closed higher on last Thursday, that recovered on Friday for a second consecutive higher close, requiring at least an eventual third higher close, which produced the minimum and did it immediately. So not much use to that signal, other than to know that buyers really needed to be reinforced. They weren't. There's no requirement to fill this gap. It's already been filled by proxy. So this is either a extended pullback that would have been preferable to hold 77.64, has room down to even deeper, down to the 76.50, 77 area, but would have preferred to see that touch and go yesterday, already resolving up instead of hovering down here. Or this is ending this big corrective bounce to produce a new down leg to new lows. So waiting for that to resolve. Closing back above 78.25, 78.30 would be the former, and confirm that this is the temporary pullback now, be it a little extended. And then let's just look at Bitcoin and finish it up here. My targets are being met. They're being responded to. The first target created a flag, likely to resolve down, and it did, to the likely target, 21.8. And that created a little bit of hesitation. Not much. It's pretty random, actually, considering that the lower lows and lower highs continued. But we do have some support on the way down, now resistance on the way up, 21.8. Desperately needs to close back above 22.5, 22.7 to take this entire pullback and end it and reverse its momentum up so that the preceding trend, the prevailing trend, can resume. I can't even call it prevailing trend at this point, but the preceding uptrend can resume. Kind of see a head and shoulders trying to form if that's the case. And that's fine. Head and shoulders are not always reversal patterns. They can be continuations. But too much time spent down here is going to prevent or actually greatly inhibit that recovery path, and instead open the door to the less likely but still potential downside, and that gives it all up and gives it all back down into an 18,000 handle. So see if that can develop by the weekend. Ethereum still hugging its downtrend support, so it is all Bitcoin. If that's going to happen, it's going to happen by Bitcoin leading the way, having gotten its selling pressure out of the way. All right, any questions about any of that? Please ask. Meanwhile, again, meet back here at... There it is. Meet back here at 9:15. All right. Good luck today. Oh, by the way, if you are in the YouTube channel, I see a stock request. Yeah, I'm happy to look at that. I can do that post-open. Please ask me that after the first half hour. We can look at those. Right now we're getting a number of things done to keep to a schedule that we do every day. Turning this recording that we just made, turning that around. And also, subscribers have access to my blog where I post updates. Just not limited to what we just discussed, or at least a written narrative that helps to digest, process, and anticipate, and learn the methodology as well. So while I was doing that presentation, you probably noticed there were a number of different things that I referred to, like the bias signals. You can see the red and green lines on screen. There's an actual strategy that we use. It's called the bias strategy, and those are specific levels that have. You may want to pause your screen in a second, or just to be able to see this. But these are specific levels that at 10:15 can define a 60 to 90 minute window. And not a long window, but it does it twice a day with a lot of reliability. Here's some more bias rules, and this is where I'm suggesting you pause, and then I'll scroll down a little so you can see. These are rules that apply and you don't need to know these or monitor these. I discuss it in real time, and I describe not all of these, but what actually did just trigger as of 10:15. And whether we'll be looking for instance, if at 10:15 we're under 38.94, that's being tested right now. But at 10:15, if that isn't recovered, I don't care how many times it's been fluctuated around in the interim, at 10:15 under 39.84 would target 39.68. And you heard me describe what happens after that, potentially. If 40.02 were recovered through 10:15, we'd be looking for 40.16. And then there are these other rules that can also define what to expect. And just a little feature, annoying right now, but you can see in the blog, if you were looking at this in the blog and wondered what does Rod mean by a test. Everybody uses the word test. There's a lot of different meanings, even nuances can make a big difference. But for instance, test. So if you hover over that, you can see exactly what I mean. Trigger. What is a trigger? Everybody says something different. Grace period. What's the grace period? But even more so with my jargon. So for instance, a late bias. What invalidates? But it's all based on based on basically isolation. So I want to see a timing window, whether it's a static timing window defined below the chart. You see this ribbon of timing windows or time frames that I labeled. Entering one of those windows and then during that window probing a relevant level, and when that window ends, react or retracing back to the origin of that probe, isolates the interim test and traps that sponsorship. If it's sellers, it traps them. For instance, here's potentially some sellers being trapped. And if they are, that tells us we're heading, if through 10:15, these sellers were trapped and this signal having been tested isn't triggered, that'll put into play an offsetting test of the bias up signal. If the bias down signal were broken through 10:15, we'd be looking for 68. 68, if it's being tested or probed at 10:15, we'll be looking for the next lower level, 54, and so on. So, stock requests I do for subscribers through the day at any time. If you're looking at a stock and you want to pop in here and have me do an instant analysis on demand, that is part of the service. But if you have anything, go ahead and bring it up. If you could, though, after the open and after at least the first 15 minutes, if not 30. So, for instance, here's Sienna, by the way. I really like that, and I've been pointing that out. So there's Rivian, and I think the question was about going long. We'll definitely want to look at that after the open. All right? Look forward to seeing you back here. All right, good morning again. So, as we come into the open, a number of things going on here during the planner session. I pointed out three, and it wasn't even all of them, three different Fibonacci retracements and extensions that were coinciding in a cluster, really, or not even a cluster, at 39.79, 39.81 being a counterpart. We got right back in there, and with no in fact, RSI diverging positively there with no time, very limited time at least, reacted to it and did a couple things. Number one, destroyed the relentless overnight trending. I hope everyone can see the difference between what was trending overnight, even involving this bounce. We still have relentless overnight trending until this, taking out all those prior highs. So that setup that I had described doesn't play. That is irrelevant at this point. Moot. But in its place, based on the character of this reaction, we have another setup that's playing. That's this 5-stage setup. By the way, one other relevant factor to consider, but the 5-stage pattern is this. It is first identified by a running correction, higher highs, higher lows that are overlapping each other, not a more traditional pullback or retrace. So optimistic is everyone, they just can't be bothered with a traditional pullback. But that's stage 2. Stage 1, then, we see if it qualifies, is entering that aggressively and then exiting it aggressively. So we have 3 of 4 stages, the 4th being the plateau, and now stage 5. Stage 5 would retrace the lower quadrant of this running correction, which, just eyeballing it at the moment, is about 39.92.93. So there is potential for a retrace to 39.92.93. That's a lot of room, so I'm willing to look at a sell signal in here. With that as an objective, the 92-93 area. And right now, I mean, really 40.01, 4,000 half is maybe a little too, or not really very aggressive, a little too conservative, if that's a word in trading. But right now, that would be the path. See if I can find something as we get to the open that would trigger that sooner. But it's also viable to just sell this right now or right at the open and stop not too far above this. Because the other thing to consider is that, remember, the overnight price, patterns, action, all of it is relevant through the first 15 minutes, and after that it's not. So if it's going to put into play any kind of pattern and its objective, it needs to, all this overnight stuff needs to have started doing that through by 9:45. Not yet doing that, since we have this pattern, not yet triggering the reversal as of 9:45, says we just extend higher through the open to some point beyond the open later this morning. So certainly noticing this is also taking on a flag quality. I'm ready to go either way. Again, I do want to see if I can find a more aggressive short entry, but otherwise, willing to buy almost any fresh high in here. Looks like about 40.09, 40.0875. During the open, everything is vulnerable to whipsaw. It'll need to be confirmed through its first 3 or 4 minutes, establishing an extreme, and then trading beyond that with reinforcements. But these are the 2 basic setups right now. So any questions, please ask. I'll be right back. All right, so immediately, we've already started giving it up from the plateau, stage 4, so here's presumably stage 5. This is a proxy gap I'm measuring out now. Yesterday's cash session close equated to 95. Our open just now was 40.0250. That's a little off. So the proxy for the gap. Gaps are often filled or always filled, according to Walter Deemer. Not necessarily immediately, but the 61.8% retracement of that gap, the proxy for the gap, is very often filled very soon, especially if there's an immediate trajectory toward it. So 3998, let's call it, is the proxy for that gap. It's also supportive. Way to use it is, and here's the card for that. If it's being tested with 1 minute, 3 minute RSIs oversold, it's likely to extend down, break lower, or probe under it. That is done while RSIs are simultaneously oversold, would be likely to extend down. If it's probed but RSIs are not simultaneously oversold, or at least ticking down into some relevant territory, probably the test is going to hold. Maybe it'll be probed, but that test will isolate its probe, usually. Which I'm interested in here because I don't see 1 minute RSI oversold. It is deteriorating pretty rapidly into this range. 3 minute RSI is deteriorating pretty rapidly, but it's nowhere near oversold. So probably this area, this is going to be tough to break, even tough to probe, and even tougher if probed to maintain that probe. In other words, picture the water's surface and holding an inflated balloon beneath it and then letting go. It's going to pop up. And so that's what's happening here. This is identifying the water's surface at 3998 to 4000, 3999.50. And the inflated balloon is being held under that surface and then let go occasionally as it tries working its way down. Now this is during the first 15 minutes of volatility. This is actually the first 3 minutes of the first 15 minutes of volatility. That is the most volatile, least reliable, but greatest volatility if you want to try to take advantage of it. If you've got a sell stop under 4,000.5, it is triggered. It's filled. And you need to have some sort of a stop automatically placed, some sort of bracket that is automatically placed and reflects your own risk tolerance. You can always re-enter short. But now that we have the benefit of hindsight, we can even see the piercing of 4,005. Look at how that's isolating errant ticks and sentiment extreme. If that's retested, its retest is going to be difficult to break lower. It's trying to form a bottom. If we even get to break it, definitely a relevant level here at 4,000.5. Piercing it definitely by sentiment extreme, and you can see the consequence of that. This is something I love about the open, is it lets us see real quickly what that means. Sentiment extreme. All out of sentiment. Got to refuel it, or else the opposite sentiment is taking control. Remember, we're in the first 15 minutes. First 15 minutes of volatility. The market is still trying to decide what it wants to be. We just dipped into the proxy gap. Big support. RSIs weren't oversold or deteriorating into some relevant level. Not 3 minute along with one. So coming back into resistance. So I will give 4003 a benefit of the doubt as a sell signal. Whether entering one tick under 4003, waiting for it to be pierced by at least 4 minutes to establish that it's even being tested as a sell signal. I would still expect that to extend down to the lower quadrant of this pre-open pattern. But if this pre-open pattern isn't influential, this 5-stager, if this shallow dip into the upper end of that pattern, as opposed to the potential to the lower quadrant of it, if that was sufficient to find durable buyers, stronger handed sponsorship, then we're off and not looking back, not for the first 60, 90 minutes. So 875, 40.0875, the buy signal here hasn't been pierced by at least 4 ticks to even establish that it's being tested. It's being tested as resistance. It hasn't started the countdown on being tested as a buy signal. A short entry here is entirely credible. It's even really attractive because it's so close to where we'll know it's wrong to be short. And not just a stop, but a stop and reverse to long would be entirely valid as a strategy. Say 40, 10, 50. I wouldn't be any higher than 40.11. We're a little off of that now. It's not as attractive as when we were sitting at or overlapping the inflection point. Clearly relevant levels. We're looking at the right pattern. Probed by opening volatility, noise. So still potentially part of the stage 4 plateau. And either and forming a plateau that during the first 15 minutes intends to break lower, putting stage 5's target into play. Potentially satisfied instead with just having pierced the upper end of the pre-open running correction, stage 2, and already launching past the 5-stage correction to resume the rally, to resume stages 1 and 3. If we're still in the plateau, if we're still in this plateau range as of 9:45, that would lean more to the upside because we'll be testing the bias up signal. This is a totally separate system or methodology, and that is whether the bias up signal is exceeded through 10:15, putting into play its bias up target. 40.16. And at 10:15, if the bias up is going to trigger, we may already be well on our way to 40.16, maybe even through 40.16. But that's the reward to trade off of if calculating risk to reward. And there is a higher high. There is the first minimum 4-tick probe. The buy signal is now being tested. It sure looks like stage 5 was satisfied with just this shallow dip into the running corrections upper end, into the proxy gap. So we're establishing a 4-minute high to testing the buy signal. Whatever that 4-minute high is, which is currently 40.11. If it is exceeded, that's reinforcements, and we're out of here. It's totally separately. If at 10:15 we're still above the bias up signal 40.02, we're out of here. That'll put into play the 40.16 bias up target. While essentially direct path is likely, likelier than not, it's not at all assured. So the first 15 minutes is the handoff from overnight to intraday. There's no formal ceremony. It's really just the process of the intraday crowd sizing up what price they've been handed, what action they've been handed. There's some relief rallying going on since 2 days of basically reacting pessimistically to Powell's testimony is not greeting the third day's open any lower, in fact higher. So shorts that may have been anticipating a third down day are covering, or patient buyers are scrambling to get in. That may already have developed here. So there's a 4-minute high to testing the inflection. While waiting for its 4-minute high to be exceeded, there is 4 minutes of detouring, counter-trend detouring allowed to still be in the context of testing the buy signal. Earlier, it was pierced, but not by at least 4 ticks to even establish that or start that countdown. So anything in here is testing the buy signal. That doesn't mean every trader is going to act on it the same way if they've acted on it at all. One way to act on it is not to act, but to wait for the 4-minute high, minimum 4-tick 4-minute high, to be exceeded, because that would suggest reinforcements. So a buy stop above 40.11, for instance. Or knowing that the 4-minute high is in, that 4 minutes of counter-trend detouring is allowed, and we're sitting at such a discount to 40.11, why not just enter long down here with a stop, if not a stop and reverse to short, under 40.03? Not unattractive. We know our risk-reward calculation. The reward is 40.16, or that's the suggestion. Can we limit the risk to half that? A 1-to-2 risk-to-reward ratio is pretty attractive. So 8 points up. Can we justify a stop 4 points lower? Not everyone wants to take a 4-point stop. I'm just looking at the ratio first. Then we'll deal with whether, in absolute terms, that is justifiable. Some traders may sell the inflection down or the inflection up, in anticipation of just a scalp, or that it is an extreme. Shortly after seeing this sell signal pierced only by errant ticks or a sentiment extreme and react up aggressively, you can't really wait around for its retest, but that suggests that there's some sort of initiative to get away from there. It may not be durable, but an attempt to get out of there. So we're through the first 15 minutes and having extended above the plateau, above the entirety of the 5-stage pattern. I am not looking for its retrace. I would keep that labeled. That is an objective. Remember, the first 15 minutes is the handoff from overnight to intraday. Well, we also have a handoff from intraday to overnight. That's basically the position scoring window where it bleeds into, or the position scoring window bleeds into it, but the last several minutes of the intraday session. And if something's happening to the downside and it's targeting anything near, this would certainly be added to the cluster of objectives. So 4016, the bias up target is being met, being tested. The bias up signal was never triggered, but that doesn't change things. The bias up, some things. The bias up target is derived from patterns. Actually, all bias parameters are derived from patterns that developed through the close, the prior close. So there are patterns whose buying pressure is being satisfied. We just didn't have the luxury of triggering a signal that would tell us 4016, or that would require 4016 to be met. It's still relevant, and this is something you would find in the blog. Let me get it out here. So this is the bias post. This comes out after the prior close. It is for this morning. Again, based on price action through yesterday's close. And there's lots of rules to govern it, but I talk it through in real time. But here's today's bias parameters. Above 4002 at 10:15 would target 4016. By the way, if at 40:15 we're also exceeding the bias target, it'll renew the bias signal for a new target. In other words, I'll let you know what that calculation is, just as I let you know with the blog post. In here, in the video room, I'll go ahead and update that. Pullback limit is 1475. And right now, there's a cluster actually. We've got 2250 as a minimum based on the proxy gap. We also have 22 as a relevant retrace of this up leg. It's River Styx. Actually 22 to 24. So exceeding 4016 at 10:15 would next target 4022 to 24. So the 5-stage pattern, not in play, no longer in play. It dipped back into its running correction, but that was it. The proxy gap was retraced. And we're looking for the 4022-24 area. Sort of. Exceeding 4016's bias up target at 10:15 would put into play 4022-24. which we may have blown through at that time, or we may not even have exceeded. We're probing 4016 right now. That's actually the pullback limit. But we may not have exceeded 4016 when it matters at 1015. At 1015, regardless of the character of the price action doing this, but back under 4016 at 1015 will fail to renew the bias up. It'll still be a bias up so long as we're above the bias up signal, but the bias up target will have already been met. It will not have been exceeded when it matters to actually require or at least put into play higher targets. In fact, look at how 4016 is being at least retraced, not necessarily rejected, but retraced right now. So some challenge there. So just as a buy signal, every one of these lines is an inflection point. Even this thicker red line or a thicker green line that we'll have as a bounce limit on sell signals, this is a pullback limit for a buy signal. Every one of these lines is an inflection point, and it is allowed 3 or 4 minutes of counter trend detouring while still being sponsored by the same buyers that got us here. In other words, or we assume that. In other words, we assume that this is thanks to the patience of buyers being allowed to dip, to retrace, being allowed, shorts are being allowed to enter, sellers are given a little bit more leeway. Maybe the uptrend is trying to reprice itself, discount itself to attract stronger handed buyers to sponsor the rally's resumption. That's not an open-ended time frame. 3 or 4 minutes, maybe not all 3 or 4 minutes are spent probing, let alone probing deeper and deeper. But after probing the pullback limit by at least 3 or 4 ticks, 4 ticks during the first hour, 3 ticks intraday, once that's been probed by at least 4 ticks during the open, during the first hour, and we start the countdown, a cumulative consecutive 4 minutes is allowed. And then that's it. Anything deeper, anything later is no longer assumed to be counter trend sponsorship. And we can insert a 1 or 2 point buffer, room for noise. But anything deeper than that first 4 minutes, essentially, especially 1 or 2 points lower, is no longer just counter trend sponsorship. It starts to become, weak-handed counter trend sponsorship. Corrective. It starts to become stronger-handed. The sponsorship of the prevailing trend is done, and a sell signal might trigger. So as soon as I know where the 4-minute low is, which I do, I am able to get as aggressive as I want within 1 or 2 points. So let's see what aligns with other setups here. So not terribly close. Under 40.09. So under 40.09, more than 4 points under or more than 4 ticks to start the 4-minute countdown under the pullback limit, adding in at least or a 1 or 2 point buffer, room for noise. That's where I can start to be assured that it is no longer weak-handed counter-trend sponsorship, but stronger-handed sellers that are retaking control. And if I wanted to be as aggressive as possible off of 40.12, I could look at 40.11. Actually, like 40.10.25, there's something else that comes in here as the upper end of the cluster. just preliminarily. If looking to buy a pullback, this can be used in a lot of ways. This is just one bar now probing under that 4-minute low. It's still overlapping that 4-minute low. If this is just that noise and the rally intends to resume, that makes this the cheapest that the pullback should get. So that's actually a really attractive long entry. Doesn't make it any likelier to play out. It is a zero greater degree of likelihood of resuming the rally. But it's so close to where we'd know it's wrong to be long that it is a really attractive long at 40.12, 40.13 with a stop or stop and reverse to short under 40.09. So 3 or 4 points of risk for the potential of resuming the rally, just returning to the high. There's always an attraction to 40.16 so long as we're in its orbit, which we are still because there's just one leg down from it and it is still overlapping 40.16. So not even a 1-to-1 risk to reward. Not very attractive, but at least it enhances that opportunity. Now that risk to reward doesn't work if there's not a resting stop. Can't do a mental stop. This market, especially this time of day, moves too quickly. Plus, we can't rely on ourselves necessarily, if not for speed. Just psychologically, sentimentally, being able to pull the trigger. That's a tough skill to develop. Got to have a resting stop, or in this case, a stop and reverse to short. Otherwise, that risk, the risk number in your risk to reward equation, that quotient is irrelevant. Got to be willing to take the reward too. Otherwise, that's irrelevant. So I'd sure like to see this rejected. If it's going to take that extra little probe under the 4-minute low, still within the context of 2 minutes, room for noise, but still, if it's going to extend that 4 minutes, not just in duration, but in degree as well, I'd like to see that rejected pretty quickly. All right, since we have exceeded the 4-minute low, even though it's still within the context of being overlapped just as noise, a lot of responsible stops have already been triggered on the way down, so let's just identify what would basically be a new buy signal. Still the same setup, it's the same sponsorship. Back above 1625, 401625. So far, so good. I mean, we are back to testing 4016. Look again, look at the detail here. 4016 is an inflection point, and what do we see above 16? Or 1625 for that matter. One errant tick. Actually, there's two errant ticks above 4016. Certainly not the minimum 4 ticks to start our countdown. So it is behaving as resistance at the moment. Now, this is starting to open up a couple other patterns, but before I describe those, keep in mind the clock is ticking down. It's ticking down to 10:15. And at 10:15, if we have landed above, at that moment in time, that snapshot, if it's above the bias up target, renews the bias up. What does that matter? Well, I'm about to describe a bearish pattern that would trigger, let's say, at 4010. But if at 10:15 we're above 4016, suddenly it's a renewed bias up, or at least in our own understanding of the market, and a pullback under 4010 may just be one more dip in a bull flag, and we get whipsawed right back out. So be aware of that. The timing is important. If sellers are going to retake control, they need to start that process. That is, if they trigger a sell signal, they can't afford to look back or hesitate. The pattern won't tolerate that. So 40-10-25. 40-10-25 is the inflection. Now this is at least 4 ticks probing above 1625. The countdown is on. Now remember, this is just to resume the upside momentum that had stalled at least. The 4-minute low was only being overlapped and only to within 1 or 2 points, so the pullback limit was never actually violated, but just identify an inflection point that is retracing so much of the relevant portion of this dip that it is increasingly likely that momentum has resumed. So neither of these are influential at the moment. Now we can't be doing both. We can't be testing a buy signal and triggering a sell signal at the same time. So I want to again be clear. This is just a resumption of the current buy signal already in play, waiting for its own signal to trigger. But we're now back to testing the pullback limit. The pullback limit's 4-minute low and its overlap. We have no control over knee-jerk reactions to news. The reaction is done within 60, 90 seconds. Anything residual after that is no longer just knee-jerk reaction. So we're sitting at support. It's been pierced just by errant ticks, not even by 3 or 4 ticks or 4 ticks to start the countdown. That doesn't mean it's going to hold, but it has an opportunity here and had a better opportunity to start probing and chipping away at that support, and it didn't. Something to be said for that. Plus, here we come, 10:15, right around the corner. It's actually a bigger corner than that. I'll explain that in a moment, but right around the corner from 10:15, when being above the bias up signal triggers bias up, regardless of whether we're also above the already tested bias up target to renew it, it would still be a bias up window, leaving one opportunity to reject it at 10:30. We're down to one opportunity to reject the bias up. I'm assuming that bias up is triggered in another 4 minutes. After that, at 10:15, back under the bias up signal at 10:30 would reject it. And by the way, having fulfilled the bias up target wouldn't just reject the bias up. It would essentially put into play the bias down parameters, at least the bias down signal. It would be pretty bearish. So within 3 minutes of 10:15, either way, if the bias signal, not the bias target, no grace period on the bias target, but on the bias signal, touching the 4002 within 3 minutes of 10:15 would invoke a grace period. It doesn't mean price can't move during that window, but the actual signal would be delayed from triggering until 10:30. We'll talk about that if that happens. And it's not out of the realm for that to happen. As much time and distance as we've spent above the bias up signal, it's not yet 10:15. And just touching 40:02 within 3 minutes of 10:15 would invoke a grace period through 10:30. And does that look like an inflection point? If that's not recovered, and it's certainly behaving like an inflection, if that's not recovered, if the probe is any deeper than its first 4 minutes, then that extends. So this is a 61.8% retracement back to the high. This is now a separate downleg that distinguishes the sponsorship. It gives these sellers more credibility than just what might have been a knee-jerk reaction or the first reaction down from the previous trend's extreme or the current trend's extreme. Just a correction. This is now a fresh low. That opportunity for this to be a flag, that's kind of gone. Always potential that this is just a false break from the flag. So I take the second widest swing as my basis for looking to the 61.8. Room for noise beyond that, we're past it. Something else we can do is measure. Here's first of all that math. This is the 61.8% retracement, high to low. Here's a 61.8% projection of that Fibonacci scheme since we're operating under its auspices right now, basically. That could be a good catch. This could be the end of the drop. Haven't yet extended deeper than the first 4 minutes, so we don't know if this is just weak-handed counter-trend sponsorship. It's 61.8 projection or next extension of the retracement that just held. The bounce limit is 40.0850. It's a bounce limit, not a pullback limit. So in that context, this is green. It's just an inflection point that can be probed. If we probe above 40.0850, 3 or 4 minutes of weak-handed counter-trend sponsorship may contain that. Kind of tough to justify or rectify all of that in the context of here it is 10:15 and we just triggered bias up cleanly above the bias up signal. It's not being touched or overlapped. Still a couple minutes to be within 3 minutes either way of 10:15 and touch the bias up signal and invoke the grace period. Also, even if the grace period is not invoked, that is by 10:18, touch the bias up signal to start the grace period, even without the grace period. Back under the bias up signal at 10:30 would still invalidate the otherwise cleanly triggered bias up. The difference being that if we can touch the bias up signal in time to invoke the grace period and then break under it through 10:30, that would actually be a late signal. That would just, the grace period would have allowed delaying the signal. And then under 10:30 would be a no bias, not a bias up, rejecting the bias up, and rejecting both bias up parameters would put into play offsetting tests of both bias down parameters. It's like a virtual bias down. And there you go, just like that. We're within 3 minutes of 10:15. We just touched the bias up signal. The grace period is invoked. So here's the grace period. Still testing the signal at 40:02 within 3 minutes of 10:15. Invoking a grace period. So we're still going to get a signal, but it's going to be called a late signal. Bounce limit is 40:02. So a late signal. We could still trigger bias up. That is, now that the grace period's invoked through 10:30, at 10:30 we may find ourselves right back up above 40:02. This may just be a knee-jerk reaction. Obviously, it's a knee-jerk reaction to a headline, but not anything significant. Just significant enough to merit a knee-jerk reaction to, but temporary. And at 10:30, right back above 40:02. Maintained at 10:30. Like right now, this doesn't count. It'll only count at 10:30. To have recovered 40:02, not overlapping it still. That would just be a late bias up. It would put into play a retest of the bias up target and maybe more. Meanwhile, alternatively, if in fact whatever this is reacting to, and I'm not talking about just this instance today, it really doesn't matter. That kind of a bar, obviously it's a reaction to something. But just every time you see this at this time, whatever this is reacting to, maybe it is significant news and it merits some more substantial reversal. Having satisfied the buying pressure of the bias up target and not attracting reinforcements, kind of at risk of that actually, that the market's going to lack the sponsorship to help buy the dip and need to reprice, need to discount even more so to attract stronger handed buyers. So if that's the case, because in doing that, tests of both bias up parameters will have been rejected, we can then know how deeply the discount has to develop to attract those stronger handed buyers. And that's at least to the bias down signal. We know that if bias up doesn't trigger late, having tested both bias up parameters, I think I said virtual, it's a synthetic bias down. Without even touching the bias down signal, let alone breaking it through 10:15, the bias down target would be put into play. Not a requirement, not when it's triggered late, but the bias down signals test would be, so we would know we're heading to 39.84. Under 40.02 at 10:30 says we're heading to 39.84. It's a pretty significant reward, and it's pretty great information to have when you're sitting up at 4,000. But right now, there's a bounce limit being tested. The bounce limit is allowed 3 or 4 minutes. Once we get past the bottom of the hour, we'll just be really looking at 3 minutes, depending on how volatile it is. But 3 or 4 minutes of counter trend detouring, so long as it's limited to within those 3 or 4 minutes, it's just weak hands. So if we know that and we're sitting at the end of those 3 or 4 minutes, we're still sitting so close to the top of that 3 or 4 minute window, that's a really attractive short entry, because when including a 1 or 2 point buffer, room for noise above that, like 40.07, assuming that's where the 3 or 4 minute high is right here, a 4 point risk to the potential that we're heading to 39.84. That's a pretty good trade-off. But also, got to be positioned to take that risk. In other words, implement that risk control. Not with a mental stop, with a resting stop. You can always re-enter short. So we have a high degree of confidence. We're sitting at the upper end of weak-handed counter-trend sponsorship. Unless we get another couple points plus higher, like call it 40.07, above 40.07, much less likely that this bounce is just weak-handed buyers correcting. So a really attractive short entry. That, by the way, doesn't make it any likelier to play out. It may not tick down one more tick before surging multiple points. It's no likelier to play out to the downside. It's just a really efficient way to identify attractive risk to reward. Your trade selection, where you actually trade. Not the trades you take, where you actually execute them, is just as or more important than the actual trades you take. You can take bad trades so long as they are priced reasonably, that is, so close to where the stop would get you out. Now we're further from that point. Now it's a more expensive short. Over time, presumably, not all trades will be losers, and if we're using a decent identifying system of profitable trades, we can keep planting seeds, clearing the garden of the weeds when they show or get too long. Any questions, please ask. So we're also tracking a lot of stuff going on, a lot of moving targets here, or moving things to track. We're also tracking a 61.8% retracement back to the origin of this bounce. There it is. So if this were to resume bouncing, it would be even more likely it is not weak-handed counter-trend sponsorship. That will have played out already. Instead of having to extend it by attracting stronger hands without any kind of pause, this is correcting. A fresh high now would start to be likelier to be stronger handed sponsorship. So we definitely want a buy signal, because if in fact at 10:30 we've held 40.02, not still overlapping it, but probing back above it, especially above 40.05, then we'll want to be long, because we're heading back to 40.16 in all likelihood. So my buy signal is back above 7.25, 40.07.25. Now, once that bias is established, if we're not still overlapping 40.02, etc., at 10:30, once the bias is established, then the morning's influence for the next hour is pretty reliable. If we're still overlapping 40.02 at 10:30, we were overlapping it within 3 minutes of 10:15. If we're still overlapping it at 10:30, not decisively holding it by bouncing back above it, not decisively breaking back under it. So not a bias up, not a no bias, but a non-bias. At that point, no requirement to return to the bias up target, no requirement for an offsetting test of the bias down target. Either one of those could develop. They don't often in a non-bias. If the relevant level, I've identified the relevant level at 40.02, if it is still being overlapped both within 3 minutes of 10:15 and then again at 10:30, whatever the interim action, that generally sucks the volatility out of the morning. Tells us that it has been sucked out. So we're past 10:30 and not overlapping 40.02. The grace period withstood the test of 40.02. That was put into play very last minute, literally last minute. And as a knee-jerk reaction to a headline, by definition, that's weak-handed sponsorship. It never attracted reinforcements, not when it mattered. And we can throw these out, these levels, all day long. This is a relevant level to hold or to break, but it's pretty arbitrary if we don't have an x-axis of time. When does that window close on being able to pronounce it as having held a test or broken? And that's what the timing window is about. Both the fixed timing window, in this case 10:15 to 11:30, if you look under the chart, you can see the ribbon of timing windows. These are fixed every day. 10:15 to 11:30, there's a grace period. We're talking about a herd, multiple herds of people, and so it sometimes can be a little off in timing. Or we're talking about things that are not in our control, like when somebody releases a headline that deserves a reaction. And so it gets a reaction, and right at that moment of the reaction, it happens to undo what would have been recovered otherwise. So it gets that extra grace period. But those are fixed timing windows, along with their grace periods and the rules that invoke them. And even then, stuff slips through the cracks. There's also dynamic timing windows. Dynamic meaning that they are opened. There's a fixed time for them, the window to remain open, but they're opened by some action that happens or doesn't. But it has to happen before that window can open. So in this case, of all these little lines, the blue, red, or green lines, these are inflection points. And however they're being used, they are at their core identifying the difference between weak-handed sponsorship or strong. Any of these inflection points can be probed. The first minimum 3 or 4 minutes of that may just be weak-handed sponsorship, and we will treat it as if it's weak-handed sponsorship. And there's some other things that kick in that case while we're doing that create strategies. But once that 3 or 4 minute extreme is being exceeded, we don't have that luxury to consider that to be weak-handed. It starts being stronger-handed. All right, pullback limit is 40.09. Now, presumably, having triggered late bias up, even though the bias up target's already been met, we're going to retest it. Because it's already been met, it's not a requirement. It would have been a requirement, literally a requirement, triggering bias up, that the bias up target be met if it hadn't already been met. It has been in this case, so it's not a requirement, meaning less likely. Slightly less likely, though, because we just triggered bias up. And by the way, even though 4016 is further satisfying buying pressure from patterns that developed through yesterday's close, that doesn't mean it has to stop there. In fact, it's already served as resistance. If we're going to return to 4016 after it serving as resistance, and not arbitrarily, but to a relevant degree, testing all sorts of relevant stuff, there's greater potential, if we're going to return to it, that we're actually trending through it. And the next higher attraction, if we do, is the 40, 22, 24 area. There's a cluster there that we would assess as we started closing in on it. All right, so any questions, please ask. I'm going to put this in the blog and be right back. So I do see a question. Did I know what the actual news was? I don't really. I'm not tracking the news. Of course, we can see on any number of feeds. Do I care what it is? Not really. I can see what the news is, the degree of significance of it. If it's even news, I don't care that it's news. It could be some huge seller that came in. That is news. If you're in the know, if you're on a desk and you know somebody just whatever, I can go through a number of different moves that could be made that would send shivers down up and down the street, but not durable. They are basically artificial news items, or not news items, no artificial catalysts, not organic. But a headline typically is going to be an artificial catalyst. The market adjusts to it, and whatever it was trying to do prior to that, it resumes doing. You can also assume the longer that knee-jerk reaction, obvious knee-jerk reaction to something, doesn't extend, you can also assume it's just a brief reaction. Whether it's going to actually have stretched the rubber band to snap back up is another story. We use other tools as I talked through them. Those are the tools to determine whether that is actually snapping back up. Having already met the target, we could have just as easily gone out at 10:30, still overlapping 40.02. The bias up signal, not invoking any reaction, usually just sitting there for the next hour. Do I like taking breaks of trend lines at my levels? Yes and no. It will depend on the approach. So, for instance, I could have a trend line. Let me find something I can play with. So let's forget that this happens to bridge overnight and intraday. I just want to find a trend line. So here's a trend line, for instance, and let's say that's a level, 40.06. You see the hesitation? Often you'll even see a bigger reaction and then another bigger break. So tactically, I prefer to give that support test an opportunity. Then I can actually measure. I can actually measure the reaction and identify that 61.8% retrace back to the origin of the reaction, and that might be my signal to enter, to take that break. Sometimes that works out to my advantage. It can even be back on the other side of the trend line, and I'm anticipating then that the trend line is going to break. And when it breaks, that's when a lot of the trend following systems will add that extra fuel. So, like right here, are you talking about this? Is that the trend? Let me know if that's what you mean, if that's the right here that you're talking about. So let me know what the relevant level is or the connections. I don't see an uptrend on the 1 minute. Maybe we draw ours differently. I go with extremes. But give me the timestamps that you're looking at, and we can see. All right, starting at 10:27. So, um, no, that's 10:18. Sorry. So to me, I don't really have a trend line. This doesn't really fit my rules for a trend line. I mean, is this it? I'm not really sure what we're looking at here. I need an extreme. I can't take arbitrarily a higher low. My trend line has to begin at one of two things: either the actual low or the pivotal low. The pivotal low would be the low prior to the actual low. There's some other rules that help to define that. I can't really do that right now. As I'm finding them and I draw them, I describe them in real time. This is as much a learning environment as it is for showing signals and talking through them, how the methodology applies. I have subscribers who have been here, I mean, literally over a decade, almost 20 years. And they think just it's second nature, of course, as you apply these rules. But you've got to be immersed in it. And I find that basically subscribers who are students who are immersed in it in real time, who are living it, as opposed to going back and reviewing. You can go back and review as homework, but living it in real time and discussing it, that's the way to really learn it. By the way, pullback limit is now 40.11. So, but as I see another trend line that is relevant, because they are relevant. Here's one, look at the 3-minute over here. Look at the 3-minute chart. So if you look at the 3-minute chart, you can see overnight there was a downtrend. I don't know if you heard me or the recording of the morning planner session. I was talking about this. Trend lines, they don't define a trend line, a trend reversal. They define the trend, but a trend line break doesn't define a reversal. It may lead to one, and so it's an optical illusion. But very often you'll see, for instance, that last touch, you'll see that trend line break. That's not a lot of distance there. You'll see that last touch. You'll see that be the peak of the breakout and then suddenly reverse down, or eventually. But hold that. That's where a trend reversal develops. So it's not even the trend line. It's the connector, anchor connector. But that's part of what I teach, is how to draw a trend line. There's really at their core 2 ways. They're complementary to each other. It's not confusing, but you got to know which prices. And then there's all sorts of other rules. You don't draw an intraday extreme and a close. That's not an anchor and a connector. They've got to be of the same category. But we do that in real time. I have, my service is viditrade.com. So if you go to viditrade.com, and here I'll do that real quickly. But if you go to viditrade.com, this is my site, and you can start a free trial. Just click on any invitation to starting. And there we go. This that you're watching right now, this I do every day, all day. Every day, all day. I only open it up on the YouTube stream once a week. And I'm actually changing how I do that, just so you can see what I do. But that's called the Vidi Room. And I suggest subscribing to the Vidi Room. And you'll only actually pay for the first term. You only actually pay $175. That's after the trial. If you keep it after the trial, first week free, and then it charges $175. Even this one charges $175. And if at the end of that week and the extra 4 weeks you don't want to keep the room, you just want to keep the blog, the updates that are emailed, you could do that and downgrade. Most people keep the room because $50 a week. And you can see the trades that I'm throwing out, or the signals at least. All right, so speaking of which, there's 4016. So there's 4016 effectively met, retested, already met, and here it is being tested to within a tick. Pullback limit is actually raised from here to 4012. So the 4012 is being pierced. But that's the predictable. That was the predictable, that we would get back to 4016. Well, we did it. There it is on the 3-minute chart. It's still a bias up. So maybe we're going to continue extending. Let's see how the pullback limit goes. Because we've just retested the target, and we know there's a lot of buying pressure being satisfied there, the 3-minute test of the pullback limit may not be that attractive. It may not be that attractive of a long entry because we don't actually need to return to 4016 any longer. I actually like it. I do like the 4016 or the 3-minute low to testing the pullback limit for another long entry opportunity. You can always we'll be able to stop out and we can always re-enter long. But since we've already been to 4016, returning to it, there's really no bearish reason for that. We've already done that. Been there, done that. Likelier is that we're chipping away at resistance. At least I'm willing to give that a benefit of the doubt that that's what we're doing. Looking at the bigger picture, the reaction down from the upper end of this channel. Here's the channel that dates back to February's high. The channel that dates back to February's high that was broken, is it 3 weeks ago now? Influential on the way down, and then back up to its upper end, to its lower end. Pretty good degree of confidence that that channel remains influential, and if it remains influential, then there's a higher degree of confidence that we're returning to and through its upper end. Still challenges along the way, of course, and any one of them could not only interfere and interrupt, but reverse and get us back out of the channel. So never 100% assured, but I'm getting a greater degree of likelihood here, of course. This is just a 50% retrace. That's a natural area for failure. So that's one of those things I'm saying on the way to recovering can instead fail. So there's right to that today's high. Essentially, that's 50% of the way back to the channel's opposite end. That's a candidate for just resuming the decline. So while bouncing off the channel is necessary, off its lower end, that's necessary to return to its upper end and through it. Since we've retraced 50% and responded to it, we have to be cognizant of how important it is to extend higher, to resume the uptrend. Right now there's a question mark here. And just eyeballing this, it looks like under 93 would tell us that the decline had resumed. And by the way, at this point, if the decline resumes from a 50% retrace back into the channel, having bounced from its lower end, that's just one pattern that's developing in all this time. But it's a pretty big one, and it's likely to be a big failure. So I definitely want to have another sell signal identified. Here's a pullback limit being tested for 3 minutes down to 40.10. So 10.25, but 40.10. So we're still in the bias up. We're about to still well immersed in it, but we're about to cross the top of the hour and get closer to it lapsing, and there's all this room down to the bias up signal while still honoring the bias up. So I'm going to just go with full 2 points here, 40.08. Under 40.08, I'm going to give sellers a big benefit of the doubt. That doesn't mean I have to wait to enter. I could already be entering now that the pullback limit's 3-minute low is probed under 40.10. I could have entered, I could have faded 40.16 or have some rule like, did I just meet a target? Or to within X ticks. And let me just get this positioned. And is it reacting to whatever degree versus whatever, in this case, look at that congestion that tries breaking higher, that magnetic, that basically takes on a magnetic attraction, making it difficult to extend. If it extends to a greater degree below it, back through it deeper than 61.8, so under 40.12. There's a number of different candidates to trigger actual short entry, not just to identify that the upside is getting less and less reliable. Well, so much for 4016 chipping away at its resistance. But let's see how this does. All right, getting this into the blog, and I'll be right back. All right, so this is 40.0150 bounce limit. As we come back into the lows, slightly lower low, but lows, a little bit of support sort of coming in. This is going to be the more critical test right now. So could just be obligatory support. In other words, a temporary bounce. Everybody sees and experienced that test previously and its response. So see sellers stepping back a little bit. The bounce limit is up at 40.0150. So it's barely even being tested. It's been pierced by at least 3 ticks. One of those is an errant tick, not overlapped by a subsequent bar. So it's not even a great test. I don't even feel committed to starting the countdown, the 3-minute countdown. I don't even know where a 3-minute high is because it hasn't yet been probed by a solid 3 ticks to start that 3-minute countdown. So I don't know where reinforcements or counter trend sponsorship, that is, strong-handed, would arrive. So still giving sellers every benefit of the doubt. Now at some point, since we're still in the bias up window, so long as this is still overlapping the bias up signal, it's not yet risen to the level of really trying to chip away at support. If we were, or that is weak-handed sellers, this could just be noise. There's a little difference between noise and weak-handed sellers. Noise, like strong-handed buyers being patient and letting price drift, if not sellers to some degree pushing price down just to overlap or test the bias down, the bias up signal, the lower end of the bias up range, making it attractive to the sponsorship of the bias up. Probing the bias up signal in a bias up window, that is weak-handed sellers. And they are doomed to failure, or at least needing to correct to some level before a more significant downdraft could develop, if it even will. Right now we're on the borderline. We're on the cusp between those two definitions. So I can't really give these sellers more or less credibility. And now we're back to piercing the upper end of it. The 40.02 bias up signal. Now, as we get to within 10 or 15 minutes of 11:30, and the bias window is within view of lapsing, I don't give sellers or categorize or label sellers as being weak-handed necessarily if they're probing under the bias up signal. It's so close to the bias window starting to lapse, and therefore that much further away from stronger-handed buyers defending against it, that we can give sellers a little more credibility. Potentially a flag continuation or wedge forming. Now we have a solid 3 ticks. So I'm counting down 3 minutes to see where the 3-minute high is. And if we're still sitting up there, not already, because all 3 minutes don't have to be spent probing, let alone probing successively higher. I mean, this one is. But when we know where the 3-minute high is, we'll see how close to that 3-minute high plus 1 or 2 points buffer for noise, how attractive it may be to short. The bias up is within view of lapsing, so there's one last defense against that. Doesn't make it any likelier to reverse down, just that much more attractively priced of a bet. So we're at 40.02 as the 3 minutes lapses, the high of that being about 40.04. So short doesn't have to be entered immediately. We can slow play and see a bounce here. Maybe even look for a retest of 375 with a 1 or 2 point room for noise, say up to 40.05. Limit short at 40.0450 or 40.03 or 40.02, any 250, anywhere in here, not too far removed. And now that we've been able to identify the usual attention span of weak-handed counter-trend sponsorship having played out, that's also that being the time span of their attention span, not only how productive they tend to be when they are counter-trend, when they are weak-handed. We also expect to start seeing this resolve down sooner rather than later, if in fact it intends to resolve down. So a delay is not bearish. Has your sound returned? Did you have an issue with sound? I turned the volume on. I turned the mute on occasionally, but only when I'm not talking. So yeah, that is a interesting window as well when Europe closes. That's part of what's relevant about this window that we're about to enter between 11:30 and noon. It's basically the cusp between our morning bias window and the noon hour. We're also absorbing or positioning for, just like we do at the end of our day domestically. Europe's desks are positioning themselves as well. They are handing off from the overnight, or from the intraday to the overnight. All right, so let's get a buy signal working here. Can I be as aggressive as 40.05? Do I have to go 40.0675? $5.75. So definitely within view of the bias window lapsing. Back above, this is so developed now that it is either a continuation pattern and needs to start breaking lower. It bought itself some time here, breaking lower a little bit, creating some room for a bounce. It's just noise. But it should be resolving down more obviously within minutes if it's going to resolve down at all. And it's not resolving down if it's probing fresh highs. So fresh highs above 5, at this moment, 5.75, and I'll lower this as possible, but above 40.0575 starts to signal that the bias window is going to lapse in a rally. I start giving buyers a benefit of the doubt above 5.75. Yeah, 4 minutes during the first hour, but just room for noise. It's also the usual attention span of counter-trend sponsorship. What makes it work is the bounce limit and the pullback limit. What makes it work is I calculate those levels. They're not fixed off of the prior extreme. But that is what starts the countdown. That has to be in the right spot, and then the countdown has to start by piercing it by at least 3 or 4 ticks. Right, I am not speaking. I will speak when there's something new or something to do. And right now, I do want to point out I'm lowering the bounce limit. So, fresh low at 97 isn't itself very remarkable. I mean, it's on the plane of downtrending support. So it's piercing a prior low. It's not actually breaking it necessarily. Still overlapping it. So it's potentially just pulling back for another launch. All that is possible in this. We haven't disproved that, in other words. Bounce limit is 40.05. 4,000 half, 4,000, actually 4,000 quarter. So notice also, as we dig deeper and deeper, each of these digs is still overlapping the prior low. Doesn't have to get down to this target area. That's just a really critical spot to gauge the reaction. But meanwhile, RSI, well, 3-minute RSI, first of all, hasn't even returned to oversold territory in all of this. 1-minute RSI at the moment is diverging positively. A positive divergence is not in itself a buy signal. It contributes to a buy signal with other inputs. It is actually sellers calling for reinforcements, or at least think of it that way, but sellers often get reinforcements. What's important to sellers is that those reinforcements continue pushing price down before RSI can break that interim high, take RSI back into oversold territory. So that's what sellers are trying to accomplish. If this latest, the current down leg is retraced more than 61.8, that's back above 40.01 quarter, then sellers will be failing to do that. Back above their interim high, price high, let alone taking RSI back above its interim high simultaneously, would be bullish at that point, having originated from RSI's diverging positively. A bet can be placed prematurely to that proof in anticipation of that developing, but with a stop. So the YouTube stream is just for the morning. I do this every morning and day, all day long. We start at 7 with the planner. If you scroll back in the chat, you can see the link to the recording of the planning session we do for our trading plan for the day, what's going on, what influences there may be, what signals could develop, what setups of mine are forming, or I have a feeling will form. Just my my familiarity with them, I can see things coming on the horizon that suggest we're going to be testing this or that. For instance, the channel I just pointed out, the 50% retrace of the channel, that's a relevant area. We don't have a signal on that at the moment. I can just tell you there's a challenge needing to close above it, and until we do, the risk that we don't. But that's not really a setup you can trade against. It just tells you maybe you want to be a little less bullish until then, or here's why these other bullish signals you're seeing may be that much more powerful. But anyway, the room is open all day long, starting with that 7 o'clock. Again, scroll back in the chat. You can see the link to that recording. You don't have to be at the 7 o'clock presentation. 9:15, we meet up again for the pre-open update and actually look at setups, look at some trades we're going to take or consider taking, what would trigger them, how to play them. So this morning before the open, we were looking at this 5-stage trade that was developing and what its relevant levels were and likely resolutions. And that's recorded too. You can scroll back. Go ahead and scroll back. If you weren't here for the 9:15 update or haven't listened to the recording, go ahead and play. It's 3 or 4 minutes. And compare that to the open and see how the open played out and how the pre-open update helped to anticipate. That's half the battle here in this game, isn't it? Is responding to price action. Well, if you've already got gaming, if not one game plan, but you have gamed out possible, the likelier reactions, not every single possible, but the 1 or 2 likelier, and often it's just 1, then you're that much more predisposed to acting on it. Knowing where it's going to get to, knowing what's going to tell you it's wrong. So anyway, the room is open all day. We do this all morning, and then as offered throughout the day, as setups are offered throughout the day, and I identify the relevant levels. And just knowing the relevant levels is worth the price of admission, however you trade them. But we can look back. Here's the 3-minute chart. I always leave the morning bias signals. I mean, they're pretty, these are there before price gets there. They're labeled back here at the beginning of their lines. Look at how, by the end, price was obeying them. They can be really influential. And there are rules designed around how to trade them, depending on how they're responded to. Bounce limit is 99.50. So there's a lot of setups I have. I have a setup on Friday afternoons, the Friday evening. You think Friday afternoon, what's happening there? Nothing. Actually, my favorite setup, the most reliable of setups when it forms, is Friday afternoon, and it's really profitable when it triggers most of the time, and it's very quick to know that it's a bad signal if it is. The open. A lot of people say stay away from the open. It's too volatile. So I created indicators that tell me how to capture that volatility. I mean, here I'm identifying the inflection that in the first 3 minutes, yeah, it's probed, but we know from the character of that that's a sentiment extreme. Probing a relevant support. What is it going to do but bounce? And not a little. So the levels, if you know the levels, that again, that's worth the admission right there. But then all the setups that I teach in real time, and if you have access to the blog, you can get all this historical information on each of the setups, all the dates that they developed previously. And go do your own investigation of them. So much more that's offered there. Anyway, that is, if you go to viditrade.com, it's linked from this YouTube channel. If you go to viditrade.com, you get a free week free. And what's normally $375 a month, which includes a $200 upcharge. And included in that $375 is $200 to access this room, not just the blog, but this trading room, every day, all day. That's actually waived. The extra $200 is waived the first 4 weeks, the first 4-week term. So it's $175 after you take it for a week free. As far as this room, I open it sporadically, no predictability. Once, maybe twice a week, and just for the morning. Like this is getting ready to close. I'll be closing this room, ending the YouTube stream in a few minutes. And then it'll be sometime next week that I announce another one. So make sure, by the way, you're subscribed to this channel so you'll get that notification when it's reopened. But if you want it consistently, you need to subscribe, and I suggest going to the site, viditrade.com, starting a free trial. A lot of stuff coming up. Tomorrow's payrolls is going to be of interest. There's the afternoon prior to the employment situation report is often paralyzed by anxiousness. I've noted that over here. PM this afternoon, pre-NFP payrolls, anxiousness. That often paralyzes price action. It doesn't always. If there's a lot of stuff out there that is anticipating or arguing for stronger payrolls tomorrow, a big number, and that is, as Powell just testified yesterday, that's going to inform the FOMC or the Fed for a 50 basis point rate hike. Down summit is 98.50. That's going to inform the Fed for a bigger rate hike and probably some language to accompany it. So this afternoon, often ahead of the employment situation report, will be paralyzed by anxiousness. But to the degree that there's concern that those expectations are real, are grounded, we could see negative sentiment, pessimism, take price back down. Probably not to create new lows, probably just to retrace some relevant levels here, like 39.85. I don't know if we need to get to 82 or 80. Start breaking those, though, and we're not just looking at retesting the lows. We're talking about 68 and 54. So wouldn't be surprised to see the afternoon that would normally be, we were greeting actually the session, discounting that, hunkering down, defensively posturing. And here, instead, we're greeting the afternoon recently inflated. These buyers are very recent. They're not going to defend against much. Look how lousy they're doing here in that effort. So it could be an interesting afternoon, but regardless, it's going to be motivated by anxiousness ahead of tomorrow's report. So, I'll lower the buy signal just in case, but for those reasons, I'm not really... back to 40.05, by the way. I'm not really interested in being that aggressive. And at least not until 90 92, 93, or 94 is tested. Somewhere in there, just to suggest that some selling pressure of significance is being satisfied. So again, tomorrow is going to be an interesting day. If you want to start your free trial by then, we also do on Saturdays a bigger picture review. It's recorded. Subscribers get the recording. And you're also welcome at any time as a subscriber to ask for an instant analysis of a chart. I know there was a request earlier if you want to ask that again. But we can look at any stock at any time on demand and identify actionable parameters. Thank you. One minute RSI still staying away from, or still diverging positively into the lower lows. It's not a buy signal, as I described on the last one. It is sellers crying out for reinforcements that are coming. They're not being very productive. They're not taking RSI back into oversold. So it is fair to consider this as pent-up buying pressure. In other words, if this starts breaking higher, that's why you can't have a mental stop. I would look for it to be pretty aggressive to the upside. So this is, even if we knew with 100% certainty that we're extending down to 92, even if we knew with 100% certainty we're extending down to 92, 94, or even lower, because RSI is diverging positively, it's just 1 minute, not 3 minute as well. I like to see them simultaneously behaving similarly. That's where their signals come from. Don't tolerate, though, with this positive divergence, don't tolerate much of a bounce. I'm going to lower the buy signal just for a moment here to be a little more aggressive above 225, 40.0225. And potentially just for a pop, but all this pent-up buying pressure, lower and lower price without taking RSI any lower. One or the other needs to give. And if it's not RSI, then price is going to have to snap back up to some degree. And it's not like there's just 1 or 2 points and then it's satisfied. We can look at the pattern. And expect 40.06 to 40.09. Just a little blip. And that's if it triggers. There's a pattern of pent-up buying pressure, sure, but there's also a pattern of lower and lower lows despite RSI diverging positively. If that's not triggered, even if we knew with 100% certainty it were going to be triggered at some point, it could be triggered from down here at 92, 94. All right, so the free morning of the stream is now done. I'll be ending the stream momentarily. And you're certainly invited to subscribe. Go to viditrade.com. Make sure you subscribe to this channel, if not, so that you're alerted when it's open again for free. Thank you, everyone, for taking time. The service itself is certainly like anything new. It has to be adopted and worked into your routine. And I know what that's like. I know what it's like to take time out of your morning just to be here for this. And I do appreciate it very much. Have a great rest of your day and weekend. Take care, everyone.